Well, we are all going to need to strap on our seatbelts this morning. There are definitely bits of good news to report, but when it comes to the markets and Tesla, today we'll start off in the red and stay there. Let me know if you have any in the comments below if you disagree with that one. Tesla stock is not down nearly as much as I would have expected with this double whammy, but maybe the investing class can see that the impact won't be that big. Markets are also surprisingly doing better than expected, but let's dig into the details. So this is Randy Kirk. Hit like and subscribe and notify. Of course, tonight we have Cathie Woods. She's going to be, the report tonight should be amazing. And Larry Goldberg and I will be talking for that one tomorrow morning. You do not want to miss that show. So hit that notify. And of course, you want to join Patreon. Lots and lots of folks this week joining Patreon. I keep forgetting to put up more names. I got to remember to do that later today. All right. Here it is. The breaking news. Tesla has cut the price of the Model Y long range and the Model Y performance to all-time lows. So the Model Y long range down to $48,490 from $50,498, so about $2,000 off. Model Y performance $52,490 from $54,490, same thing, $2,000 down. And the Model Y rear-wheel drive, which was just reintroduced, is going to hold where they just put it up at $43,990. So what's going on there? Anyway, they also cut the price of all the Model 3s. Now, this is not nearly as surprising because we've got the Model 3 refresh, the Model 3 Plus, almost certainly going to be coming out either later this quarter or the beginning of January, beginning of next year. I'm hoping for later this quarter. But there again, the drops were, let's say the rear wheel drive is now down to $38,990 from $40,240. The long range is dropped to $45,990 from $47,240, and the performance to $50,990 from $53,240. It's like $2,500, $2,400. Anyway, roughly, I didn't do the math. All right. Now, I did do the math. However, overnight, I went on to my spreadsheet, and I can tell you that roughly speaking, this $2,000 price reduction is only on U.S. cars. It is, so Shanghai and Berlin, there's no cuts as far as we know on those. So I'm figuring that this is maybe going to be a 0.2% decrease in the overall margin. So in other words, I was thinking we might be at 19. Does this mean we drop all the way to 17 for the fourth quarter percent? So if that's true, then what we're looking at is a cut in the earnings by 10 cents out of, over $3, somewhere around $3.50 for the year. This could make it $3.40, something like that. Well, in fact, let me, just for fun, I will pull that up and I will tell you exactly what it turned out to be. It was dropping it from $3.58 to $3.48. So again, exactly what I was saying. So, if you think about it in those terms, it's not massive. On the other hand, I have slipped fully into the camp that I believe it's time to give advertising a shot. All right. I mean, really. So now there's a chance that this is a preemptive move due to the potential of people putting off their decisions as a result of the IRA changes coming in January. Remember now, some Model 3s will no longer qualify starting in January, and the $7,500 will come off the price when you purchase it on any cars that do qualify, as opposed to being a tax deduction that you get to take later. So there's going to be some potential of folks holding off until January for that reason. We also have the Osborne effect that I was talking about earlier. I really do not understand coming out with the changes on the Model 3 in Shanghai so far ahead of the changes in the United States, and also so far ahead of the changes on the Model Y. These are great changes. I know I would be waiting. I would be one who would say, no, I want all those new cool things. So how have all of these things affected the decision that's being taken right now? I'm not sure. On the other hand, in the video I did last night, I gave a line-by-line review of the cost of goods drop that Tesla should be seeing with all the commodities down. I mean, almost every single commodity down, but batteries alone down by 33%. So with batteries down by 33%, it may be that they can take this entire hit of the $2,000 per vehicle, and that $2,000 and still maintain their margins up closer to 20%. I don't know. We'll find out, I guess, as we get, well, we won't know until January on that. But with batteries down 33%, it's also not surprising to find out they've reduced the mega pack costs again by another 10,000. Now that's an extremely modest reduction, given that these mega packs cost almost $2 million. So, a minor decrease. Again, I can't fully understand these things. And I believe that 10,000 decrease would only be affecting mega packs that are being sold 2 years from now. Now, but because, they have a 2-year waiting list. On the other hand, I'm suspecting that a lot of these contracts they enter into do have some kind of a moderating clause in them that takes into consideration changes in batteries, lithium, et cetera, that are subject to wild swings. All right, now that's number one. I'm only done with that first story. If we can judge the economy on the jobs market, well, then my continuing admonition that there's no recession coming was conclusively proven this morning. Not only did jobs increase by double the expectation, 336 new jobs added to the economy compared to the 170,000 expected, but the 2 previous reports were increased by a total of 119,000 jobs. I guess the good news is that if those 119,000 jobs have been properly reported in the last 2 months' reports, we would have had even more interest rate increases from the Fed at this point, maybe. Anyway, but now we have those numbers in, and this raises the specter that the Fed could raise rates. So bonds are getting destroyed this morning with yields hitting 4.845 as I am writing this. We'll take another look in a minute. Almost all of the jobs created were in services and government, with leisure and hospitality leading the way. That is not a surprise. That's where we've been seeing it. Although some people think that the leisure and services area, leisures and hospitality area will now start to kind of settle down. Maybe not. The actual unemployment rate increased again to 3.8% from 3.7%, which is really surprising, but that suggests that a lot of people are coming off the sidelines now and getting back to work. Why? Their bank accounts are drying up. Their credit cards are starting to be out of the comfort zone. And we've seen that credit card purchases, credit card expansion is coming down the last 3 months. And that might be because people are going back to work and they're paying off these credit cards. They got used to liking the way it was when their bank accounts were good and their credit cards were down. Well, I'm exhausted already. The silver lining on all of this is that wages only increased 2%. I'm sorry, 0.2% month over month, rather than the expected 0.3%, and that the year-over-year number was just 4.2% compared to the expected 4.3%. Well, this should matter, and it may be why the Dow is only down 130 or 140 right now, compared to maybe I might have been expecting 500 points. But again, we'll check those numbers again in a minute. On the good news front again, Teslarati is reporting that Tesla's lithium, listen to this is really huge. Tesla's lithium refinery in Robstown will start production on the first day of 2024. That's incredible that they're already going to be able to start production. The company's senior manager of operations shared details about Tesla's lithium refinery. We will begin commissioning the assets roughly the first of next year and will continue in earnest over the whole first half of next year. They will start ramping up production the latter half of next year, said Tesla's senior manager of operations, Jason Bevan. They're also looking at expanding the facility already. Apparently, they believe, this is me speaking now, not Tezzarati. Apparently, they believe they are really onto something in cost savings here. Will this mean that they open other refineries closer to Shanghai and closer to Berlin and maybe in India? Holy mackerel, this is huge news that they're already thinking of expanding. Now listen to this. Tesla has listed 10 new jobs related to building, designing, and building in high volume Tesla semi-production in Gigafactory, Nevada. They've listed all of these new jobs: senior architect, structural modeling lead, factory design engineering leader, lead plum engineer, BIM manager and virtual design coordinator, staff IoT network engineer, infrastructure network engineering, electrical construction project manager. Okay, I've moved buildings and I've built out buildings for manufacturing in a factory. These are the kinds of folks you need. These are the people you need in order to make in order to do this kind of thing. So yeah, it looks like maybe Semi will get back into production this year, even before this entire facility, the Reno facility, is expanded. I've been saying for months that I think they've got some room up there that they can start this line. And I joked about it yesterday. Maybe they'll put up some tents. Anyway, maybe they will. It's not a joke. Tesla this is on Mexico now. Tesla's letting Mexico officials know that there is substantial infrastructure needed in order for Tesla to build that facility. Well, this was thrown up yesterday as something like, oh my gosh, this will really slow down Mexico. No. Wait a minute. This is not a surprise to the officials. This is something that had to be completely within the framework of the things that were discussed months and months and months ago, a year ago, when they first started having serious conversations with Mexico. So this is not a surprise. This is just a laundry list that Tesla's putting out at this point. That's what I believe. Tell me in the comments if you think I'm completely wrong about that. So I don't think Mexico's been slowed down at all, any more than it was already slowed down. We'll see what happens in the next month or so. Truflation is flat this morning at 246. So take that into consideration. Take the jobs information that we just heard, that 0.2% month over month and lower than expected on the year over year. Is it possible that the economy is strong and inflation is still done? Absolutely. That would be due to productivity. And now I believe it is really time to do another episode on the incredible impact we could already be seeing of dramatic improvements in productivity due to both the leveling out of the economy after all the craziness combined with all of these technological innovations that are absolutely sweeping through the business community today. I noted the other day, we have not seen a recession in over 40 years caused by inflation or Fed action. Does that mean it couldn't happen now? Well, clearly it could, but these interest rate levels and inflation levels are not crazy compared to the norm. 4.5%, 5% yields on Treasury bonds. This is not weird. This is not high. As Jamie Dimon says, we're not going to crush the economy even if rates go to 7%. Yes, they went up quickly, but they are not crazy high, and businesses can adjust to this. There is not an underlying reason for the economy to retract at this point. We certainly saw the opposite in the job numbers earlier today. The economy is obviously expanding. And all the inflation indicators, including oil, are now pointing down, not up. Well, in unrelated but very important news, as you know, although this is certainly going to affect productivity, as you know, Brian Wang has been keeping tabs on the groundbreaking potential of room temperature semiconductors, the LK99. Well, the U.S. Navy just gave an award to Chapman University to study thin film version, the thin film version of the original. This is what the group said worked. They didn't say that in general it would work. It needed to be the thin film version. Now, they only put up $100,000 for this particular study, but it means that some people think that something's going on here, just as Brian reported the other day. The Chapman University and the U.S. Navy are just adding to the list of folks that think that there's something really going on with this. What an amazing deal that would be. All right, we're going to now look at the numbers. What a crazy day it's going to be. All right, the Dow is now down 212, NASDAQ down 102, S&P down 33, and Tesla's down 9, which is the most it's been down this morning. Those percentages would be 0.5% on the Dow, 60. All right, 0.2% on the Dow, 75% on NASDAQ, and S&P also around the same, with Tesla down 3.32. I am absolutely flabbergasted that Tesla is not down way more than $8.63 right now. Google is actually slightly up, with the rest of the Magnificent Seven just barely down. Meta down strongly, a full percent, but really not that bad. And also same thing actually with the Cathie Woods. Holy mackerel, they're not down that much at all. This could be, maybe there's a surprise in all of this. Maybe all of what I just said is actually true, and maybe investors will get it. I'd be shocked. Not that I'm true, not that I'm right, but rather that the investors are actually getting it. All right, let's look at those other numbers now. Where are we sitting? We have the Bitcoin up just a few dollars, like $29 this morning. We have the dollar advancing, of course. Of course it is. We have gold unchanged this morning, but at 1831. Holy mackerel. We've got oil down this morning, down some more this morning. This is blowing my mind a little bit now. I don't expect oil to be continuing down, but it is definitely continuing down. And my app just closed for some absolutely unknown reason. Wow. Okay, here we go. And so oil down to $81.73, and then bonds are up to now to 4.841. That's down from what it was high earlier. The 2-month is up, but nowhere nearly as strongly as the 10-year. The 2-year also up. No, it is not up as strongly as the 10-year. So mixed bag in terms of the inversion. But all of them up. Every aspect of the bonds, the yields are up strongly. One last look just for fun at Tesla. Now it's only down $7.73, with a strong directional going towards the green. Well, again, I'd be shocked if it gets into the green. So last night I did a video where I broke down the various raw materials that go into a Tesla and why they all point to a reduction in overall cost of goods sold when Tesla reports on the 18th. So that will, of course, be possibly really good margins. And maybe Tesla knows that they can get away with this $2,000 decrease. The card will be right here for that show from last night. Listen, if you haven't bought your Cybertruck yet, you just need to do it. I mean, come on, guys. It's time to buy. Maybe I should offer a price reduction this morning. So $24, okay? Today only, $24. If you buy it, this is going back up tomorrow. Your order has to be placed today to get it for $24. I mean, I gotta stay. If Elon says that I need to reduce my price, well, let's reduce the price, but only for a day. $24. And of course, you can get one free if you join Patreon at the $10 level or above. Anyway, I think I'm done. I'm going to get out of here now and get this posted so you all can get the advantage to the extent that there is an advantage.